traders, this is Cousin Vinny coming to you from theclosingprint.com on May the 20th, 2018. In this edition of your weekend video newsletter, we'll talk about the indices, all of which moved lower with the exception of small caps. IWM was up 1.27%. Most indicators are mixed but slightly bullish as the markets move sideways and consolidated recent gains. The 10-year continues to show strength and the possibility that yields will break their downtrend and continue higher. Institutional sentiment is mostly bullish, with the Nasdaq more bullish than the NYSE at the present time. NYHL is mostly bullish. The cycle is up, and we have the NYAD bullish as well. The put-call ratio is neutral. VIX is moving lower, showing that fear is dissipating. All of this with the backdrop of the US dollar moving higher. Yen is moving lower in a bearish trend, with the Nikkei moving in the opposite direction as you would expect. The British pound US dollar pair has moved lower, which is bullish for the London Stock Exchange and the FTSE. We did see a short-term fade on yields last week on Friday, with TLT and bonds showing a potential double bottom for the current week. We have the CRB index flat, gold is lower and bearish, and copper is sideways. Crude, of course, continues its bullish trend above $70 a barrel, and uranium is sideways. We have the heat map, most importantly, moving towards yellows and greens, adding a few more greens, which was a little unusual. Didn't expect that. But we do have strength continuing in oil and gas and equipment stocks. Healthcare, consumer discretionary is in caps for a reason, as that's one of the top 5 groups in the IBD 197 industry groups that are at the top of the list. International markets are being affected by the higher dollar and higher interest rates. We'll look at these IBD 50 names in addition to some MarketSmith potential trades. And we have Bulkowski with 4 or 5 green with a CPI signal since April the 3rd at 73.7, which is bullish, with 10 bearish patterns, 28 bullish patterns, and 403 patterns waiting for breakout going into this week. Starting off this week, let's take a look at the sectors, which you can see have built more yellows and greens than the preceding 3 weeks, red from left to right. We can also see that the Russell 2000 small caps are outperforming the other indices, with strength persisting in tech, even though big cap tech stocks did pull back a bit, taking a breather. Therefore, if we look at the weekly chart of the spiders, we can see price action has held at the 20-period moving average. Buyers did step in, so we're looking for a push off of this level to continue this thrust higher. RSI is above 50, and we have oscillators starting to turn and bottom. Volume was lower on the recent move sideways. To start this week, we should see a potential test of the highs. If not, we could see a move back down to the 50-period moving average, which is what we talked about last week. During this 8-day move higher, we didn't fail, but moved sideways. Whereas the previous 6 occasions, each time we hit a pivot high, we immediately failed and moved dramatically lower. 1, 2, 3, 4, 5, 6. So as RSI continues to point to relative strength, staying above the 50 zone, we should see price action drift higher. Now tick cumulative for the most part is moving sideways, consolidating, but the moving average continues to drift higher. So that's bullish for this stock market in the short term. And of course, the other thing to consider is the sideways price action, very clear on a Renko chart, is building white bricks, but is still in this sideways consolidation. As you can see, the moving average is sideways, much like it was back in 2015. So in the worst case scenario, we could come back down and test the lower part of this range. Best case scenario is we start to move higher and test 277. I think that's most likely the scenario, given some things we'll cover in this week's video newsletter. We see a similar picture on the Dow Jones Composite. This is 65 stocks in the Industrials, Transports, and Utilities group. This most closely reflects Dow theory. That said, we're above the moving averages. We are right inside this volume by price band. Most likely we'll push higher and take out these pivot highs. As more stocks are breaking out and fewer are failing, a market change in character from what we've seen previously, like we just discussed with these pivot highs failing immediately. We can see this strength also in the Dow Jones. Now this is only 30 stocks, something that CNBC doesn't usually point out, but we are in this volume by price band. Looks like support. The 50-period moving average is flattening out, price is above, RSI is above 50, and we have MACD above its signal line, with stochastics nearing the oversold zone. We're looking for the Dow Jones to continue higher as well. This is a chart of the NASDAQ 100 A-Rune indicator, and while the big cap tech stocks were consolidating last week and did move a bit lower, A-Rune is bullish. The green indicator is above 70, and A-Rune down is pushing back down, rejected at 50. So that indicator, if it continues to move lower, would signal a potential test of the March pivot high. The NASDAQ Composite 60-minute chart has been moving sideways. It needs to get back above the moving averages and take out this pivot high if you're bullish, with RSI moving higher. The good thing is that tick cumulative for the NASDAQ has continued higher, which is telling you they have been buying more stocks on the uptick than selling on the downtick, with software leading the group. So look for this to continue higher if you're bullish and a failure if you are bearish. The New York Stock Exchange, new highs, new lows, continues to build a histogram bar above zero line, as we can see, with price action moving sideways. The upper half of its Bollinger Bands, which are starting to turn in somewhat, looks like the upper band is moving higher, lower band is turning, so that could signal, if it starts to parallel the upper band, could signal a grind higher. We do have the New York Stock Exchange advanced decline moving higher, which is more bullish than bearish in the short term. So look for this indicator to continue to point to a bullish picture rather than a bearish picture in the weeks ahead, unless this changes dramatically. The NYSE Composite is also consolidating along this volume by price band. A push above the moving averages would signal a continuation of the 8-day preceding trend prior to this flag. Stochastic is embedded, and more importantly, the high-low percent is moving higher, which is telling you 52-week highs are outnumbering 52-week lows as this rises and expands as it moves above the 50 level. Looking for higher prices when this indicator is pointing to the upside. Now we won't reach extremes until we hit the 80 to 90 level, so there's plenty of room to the upside if this indicator and price action continues to climb. A more likely scenario, in my opinion, in the short term, especially if we continue to see strength in industry groups and rotation. In addition, if we consult the Wilshire 5000, a broad measure of market participation, we do have oscillators moving higher above their signal lines. On balance volume continues to climb, and most importantly, Chaikin money flow, a measure of buying by institutions, is above zero and continues to climb. We can see on previous occasions where we moved higher, Chaikin money flow was also green and above the zero line. So watch these indicators and look for the Wilshire and the IWM to continue to paint a bullish picture, as both indices are pointing to a potential breakout during the summer months, with IWM outperforming last week, up 1.27%, as we talked about in the opening monologue. All the other indices took a breather. We have small caps leading at the present time, as we can see in this weekly chart, breaking above the 160.25 zone, an ascending triangle breakout, which is a continuation pattern, with RSI pointing to further upside as a potential scenario. And finally, not to sound too overly bullish, we want to look at the XII. This is what institutions are positioned, with 75 stocks most commonly held in their core portfolios. We did close inside of standard deviation 1 Bollinger Bands, as we can see, which would be a stop if you're long the markets. These 75 stocks, as we can see, the oscillators are moving lower and flattening out in some cases. Still more bullish than bearish, but you have to be aware of the fact that this could pull back to the 20 SMA or this previous breakout level just slightly lower as we set up for the summer months. So just keep that in mind going forward, as more directional information provides itself this week. As a backdrop to everything we'll talk about in this video as well as this week live, this is not my opinion, it's just where it resides related to a trend line that goes back decades. So with RSI overbought and oscillators pointing to potential further upside, we could see a little bit more before we come back in. Now Friday, the 10-year did come back in a little bit, but not enough to break this current uptrend. So watch 10-year yields this week. They are definitely going to have an impact on our longer term portfolios, but we need to reassess the current conditions as they continue to trade near 52-week highs. We did touch 312 last week, I believe. That said, there are a lot of cross currents that need to be considered. If you are a baby boomer that's in retirement, you have to consider where your investments are positions. If you're fixed income, you're not getting much bang for your buck trading bonds. So the alternative is currencies and the equity markets. International markets don't look as good as the US markets, so that's something that fixed income investors need to look at for their longer term portfolios. If you're bullish and you're thinking about short-term trades, you want to see junk bonds moving higher. If you're bearish, you want to see junk bonds moving lower, in addition to VXX, VIX, and yields. As TLT starts to bounce, since bonds will move opposite of yields, obviously, we're looking for this double bottom to catch hold and maybe come back to the moving averages, the 50 period in this case, overhead, which would lead us to believe that yields will move lower. So there's a lot of moving parts in the macro issue, and assuming some catalyst might present themselves, thank you to Corey for this update, where China supposedly agrees to buy at least $200 billion more in U.S. services and goods to ease the trade dispute between China and the U.S. So that's more good news for the Trump administration, and it's actually good for the Chinese economy as well. So look for these two news items to continue to unfold this week, which would be a bullish catalyst for equities going forward in the short term. One less news catalyst to weigh the markets down as we move sideways over the last week. With the US dollar moving higher, this will create more headwinds for international companies that do business overseas as the US dollar continues to move higher. We do have some areas where we might see some rejection or inflection points overhead at 94 and 95. So that's something to consider as well. We're fairly extended, but this is very bullish looking at the moment. with MACD above its signal line. We are witnessing lower highs on the histogram as we saw some profit taking a week ago. This did thrust higher, so look for the dollar to continue to show strength. If you're bearish U.S. equities, if you're bullish U.S. equities, you want the dollar to come back down and at a minimum test the 200 period moving average that we passed through 3 weeks ago. So with the same mindset, a lower dollar would benefit U.S. companies and the economy, whereas the yen continues to move lower. We've seen the Nikkei moving higher. And with double Bollinger Band strategy continuing to point to further downside, we might not see an inflection point until we get back down here to these December, January lows. So keep that mindset going forward as the Nikkei moves higher with the yen moving lower. Inside of the channel, sweet spot between standard deviation 1 and standard deviation 2, we broke above pivots. If you are an investor looking for other areas to invest, look no further than the Nikkei, which looks pretty bullish and most likely will continue to move higher if the yen continues to move lower. The same can be said for the British pound US dollar pair, which has been in a downtrend moving lower just inside of standard deviation 1, rejection at the 200 period moving average. Looking for this to move lower. We got a lot of wicks down below, a lot of wicks overhead over the last 2 weeks. So if this does start to move lower, we would expect to see the London Stock Exchange and the FTSE moving higher in response to a weaker pound. As we can see with the London Stock Exchange, also in the sweet spot between standard deviation 1 and 2, following through to the upside. So if you're looking for alternate investments and areas to put money to work, look to the London Stock Exchange, the UK, or the Nikkei, with the Japanese yen and the pound both moving lower. Dollar-denominated assets in the commodity space like copper have been moving sideways. With the dollar higher, I would have expected copper to be dramatically lower. It is holding its own, so that's a good thing. While gold is reflecting more of the correlation between a higher dollar, it has been moving lower. It's below its 200 period moving average, below volume by price bands. It's in a reverse Kirby. We do see something of a bear flag with wicks on top and bottom. So indecision at this point at the 1290 level. If the dollar does continue higher, expect to see gold continue its trend lower. If the dollar reverses, look for a retest of the 200 period in the short term. And of course, West Texas Intermediate crude along with Brent, both moving higher, continuing this bullish trend since we've broken out in 2017. We continue higher this year, driven mostly by Middle East tensions. As a result, a lot of the small cap names in the oil and gas group are exacerbating the move in the Russell 2000. So if crude continues to move higher, those small cap oil and gas names that are on the Russell will continue to make better profits, and therefore those stocks will continue higher as a result. Once again, sector rotation is very evident. Strength as well, reading from left to right. Week after week, we've seen a change from reds, oranges, more yellows and greens, a little bit of red 3 weeks ago, more greens now, and strength in oil and gas continues to perpetuate. As long as this continues, we could see the S&P 500 and the NASDAQ move higher. Watch for tech, healthcare, oil and gas, consumer discretionary to continue to lead. In previous weeks, we can see a trend that continues to perpetuate in oil and gas, computer software, medical products, healthcare, transportation and shipping, oil and gas machinery and equipment, and of course retail, apparel, and shoes. So focus on these 6 groups going forward this week, and most likely the strength will continue to affect your portfolio and the stocks that you choose therein. Oil and gas, you can see the names that are ranked in this group. The big cap software enterprise group, the medical products group ranked by market cap. Some of the names in this group you might want to check out as well. Transportation and shipping, oil and gas machinery and equipment ranked by market cap, and of course retail apparel, shoes, and accessories. So that would include clothing as well. Consumer discretionary has been doing very well, moving up the list. But we'll be looking at some of those names in those top 6 industry groups for potential trades going forward. Here is the IBD 50 list for the week ahead. I've gone ahead and enabled Chaikin money flow, which will reflect what institutions are actually doing. If they're accumulating shares or distributing shares, you'll note it by a red or green oscillator. Okay, last week we had a breakout in Baozun. Most likely that will continue. We started a position the day earnings were announced. Looking for this follow through to continue. All right, the base is your measured move. All right, so basically about 6 to 7 points on top of this breakout level would give you about 58 to 59, maybe 60. Most likely RSI can get a little bit more overbought. Just now below the 70 level, we're above volume by price, which is telling you there is no overhead supply. There is literally no one to sell to you, which is the reason why we like 52-week highs. In addition, we had a previous base that formed between September and March. We broke out in the beginning of March, consolidated those gains, and now are breaking out once again. So most likely this will move higher. Volume shows institutions are interested, and as we showed you previously, Chaikin money flow continues to show institutions are interested. Oscillators are turning up, so the momentum is clearly with the bulls going forward on Baozun. Use your trade of the day setup for entries, exits, and stops. Just keep in mind that Baba is one of the biggest investors and shareholders in Baozun, and that stock is potentially showing a breakout of this trend. Draw a trend line through here. You can see that we've already broken out. We're looking for a bounce and a follow through as institutions continue to accumulate shares. Momentum oscillators have peaked a little bit, but we would look for Baba to continue higher, especially if the news that we got this weekend is confirmed and the markets respond as we might anticipate. Canada Goose also broke out last week. We're looking for a follow through. Chaikin money flow showing institutions are buying. Nice ascending triangle pattern. Higher lows, higher highs. Finally broke above this 38 zone. We're only $3 above that level. If with RSI overbought, we do have a pullback in the next day or two. This might be an opportune time to add some Canada Goose. This stock continues to push higher, consolidate, break out again. I would think that that pattern will continue. Momentum oscillators show the bulls are definitely in control. Volume showing that institutions remain interested. It's a very well run company as well. The software group continues to outperform. Adobe is one of the top subscriber based models out there. Chaikin money flow showing institutions are buying. We would like to see the 20 SMA hold. Volume by price support is just below. RSI is in the 50 zone, so it's been staying above the 50 zone for the last 6 months, leading to this higher lows and higher highs scenario. It just broke out of a base. If it comes back and tests the top of that base and we find buyers, that would be an excellent entry. Right now I'm thinking that this is going to bounce and move higher in the short term. Oscillators are flattening out somewhat, so just look for that as this stock continues its bullish trend. Stocks on previous watch list, Charles Schwab, IBKR, and E-Trade still look very good. With the workforce improving, more people at work, more discretionary income, A lot of that money will also flow into investment services, and Schwab is one of the better ones. E-Trade is the top of the list, I believe. IBKR and Raymond James Financial, RJF, all look bullish, just consolidating recent gains. RSI is above 50, indicating that this bullish trend should persist unless it were to drop off dramatically like we saw back here in January. Look for Charles Schwab to continue to move higher. As we can see, E-Trade continues to build huge chicken money flow, indications that institutions are very smart on this name. RSI is now overbought, so for the best entry, you want to see this back off just a little bit, stay above 50, and perhaps bounce off of some of these lower levels. If you're already in it, just continue to add to your position. It's most likely going to break higher, not lower. Oscillators continue to show bulls are in control. From a short-term standpoint, you could always trade this using your trade of the day setup for entries, exits, and stop. 5 below also looks very good. The idea here is that with Toys R Us going out of business, going bankrupt, and closing all of its stores, 5 below could be one of those beneficiaries of that trend. So look for chicken money flow to go positive, as the stock had a nice 4-day run last week, which we traded. We got out on Thursday. Friday it did pull back a little bit. Look for a little pullback to the flat 20 SMA and RSI to stay above 50. A breakout above 78 would definitely give us a bullish tip that institutions are most likely buying shares. For now, we'll keep an eye on this one in the short term. Grubhub is also playing on trends, ordering food, having it delivered. We're about to break this descending trend line. RSI is above 50, was below 50 mostly during this pullback and consolidation period. We're looking for this to move higher, holding volume by price support levels. If RSI starts to tilt higher as a result of higher prices, we'd look for this one to turn and continue higher. The oscillators are moving higher as well, indicating that we could see some further upside. Came down to 0, bounced, and it's turning up. So we have potential going forward as earnings season is now in the rear view mirror. Look for higher prices during the summer months, with a potential double top the first order of business once we get above this pivot high at 105, 106. Health equity in one of the strong sectors, software as well as healthcare. You can see chicken money flow is green. Institutions have been buying the stock. It just continues to move higher. We initially saw this as a potential breakout back here in the lower 50s, and since then the stock is up over 20 points. Congratulations if you took it, if you're still in it. It's trading in the upper Bollinger Bands, so upper half of the Bollinger Bands. Trending, most likely going to continue higher as volume continues to ramp up, and oscillators point to bulls being in control. Use your trade of the day setup for entries, exits, and stops if you're thinking about trading it short term as a potential candidate going forward. iArt is in the medical group as well, healthcare. Chicken money flow continues to ramp higher, showing institutions are interested and buying shares. Medical equipment continues to trend, not on the watch list, but something I am paying attention to as this trend unfolds, and oscillators indicating bulls are still in control, perhaps taking a break at this particular moment. Look for a breakout for a continuation. Jazz Pharmaceuticals, new on the list, looking for a breakout. Watch chicken money flow. LGND, chicken money flow rising, indicating institutions have been buying. You can see it, pretty obvious, on the breakout. Biotech, watch XBI as well. That might be a nice, biotech is most likely going to continue higher this week and next with a triple top target up here in the high 90s in the short term. MasterCard and the payment processors in general look pretty good. No chicken money flow is green. A little dissipation in the recent move higher A little consolidation of the recent move. Look for that to follow through as the 20-period moving average continues to point higher. Micron, going from selling to buying on Chaikin money flow, needs to hold the 50-period moving average here, just under price. Tested it on Friday along with the SMH, the semiconductor group. So keep an eye on Micron. If it holds the 50-period moving average and buyers continue to step up, would most likely add to this one in the short term, as the entire semiconductor group bounced off the 50 last week. Nvidia, also part of that group, it did see a little bit of selling. It's trading post earnings over a week. Looking for this to give us an indication which direction it wants to move. Longer term, I love this stock. It's in an industry group that's just going to continue to make headlines: artificial intelligence, autonomous driving vehicles, gaming, etc. Right in the thick of it. We also like Netflix. Chaikin money flow continues to grow as this one moves sideways and consolidates above its 20 and 50 period moving averages. PGTI, new on the list. Note that there was a lot of selling prior to last week. We got 2 days of follow through, a breakout on the MarketSmith breakout alerts. This continues to move higher. Building materials, we're entering into the hurricane season. Look for this to continue higher. Mid-price stock around 20 bucks. If it does flag, that'll give you a better opportunity. Most likely this is going to continue, perhaps 3 white soldiers and a bit higher. Use your trade of the day setup if you're going to look to enter it on Monday, Tuesday. RSI is nearing overbought, so you might get a better opportunity. The last few times this has got this high on the relative strength indicator, we did see sideways potential consolidation in each case. All right, so look for that to happen. This is breaking higher on above average volume. Oscillators indicate bulls are firmly in control in the short term. In addition to that, we're above levels of supply, so there's no one up here to sell to you at 52-week highs, so keep that in mind as well. Other names like PANW in the security space, note security, note institutions have been buying. PayPal, same comments with MasterCard and the iPay and payment processors group. SQ also in that group. RealPage software, that looks good. Red Hat and SIVB in the banking group. Consolidating. Chaikin money flow is green. Solar Edge outperforming in the solar group. Green Chaikin money flow. It's dissipating right now, giving you an opportunity for an entry if it holds this level. TAL, another name that looks good on the watch list this week. Testing a breakout of this level last week. RSI is turned up. Earnings at the end of July. Momentum oscillators show that bulls are in control and volume starting to pick up. Look for a breakout this week. Might be an interesting trade in this industry group. TTD, Trade Desk, that one broke higher last week. A follow through from the previous week on the gap up. Big earnings. Follow through, looking for that one to continue higher. Perhaps a consolidation at some point. WRD, new on the list. This one looks really good. I like what I'm seeing here. It's a small cap oil and gas name that has potential to break above this 30 zone in the short term. MACD's turning up. Volume showing institutions are involved. Momentum oscillators will turn up as a function of price. Look for a follow through this week on WRD. I really like this one. In addition, make sure you check out the names in the shoes, apparel, clothing, and accessories group, which is moving up the list, looking pretty good. These are the top ranked names that we would be paying attention to. With Steve Madden moving higher last week, in addition to Nike looking bullish. Look for a pullback to the 9 EMA as an entry on this one, with Nike flagging, giving you a potential entry here as well. This is most likely break higher into the summer months. Momentum oscillators are turning up. Volume is picking up as well. Some additional names in the software group, enterprise software group, which is number 2 on the IBD industry group rank. Microsoft continues to consolidate above its 20-period moving average. Shaky money flow shows that institutions have been buying. Splunk is a relatively new entry. A week or so ago, when it broke out of this pattern, continues to move higher. Most likely will break out this week. Other names like Electronic Arts showing a lot of potential. Gaming getting a lot of press and attention. ADP, as well as the Dow Jones Software Industry Group, continues to point to higher prices. This group has some nice potential. Qualsys also looking bullish going into the week. Additional names in the retail group: Advanced Auto Parts, no shaky money flow. Best Buy, no shaky money flow, rising 20 SMA. Deckers Outdoor, CarMax, Costco, DSW Shoes continues to push higher. Guess Jeans, Home Depot, Home, in addition to Lulu. I think they're trading post earnings now. Macy's continues to press. Very nice report this earnings period. And Restoration Hardware consolidating above its 20-period moving average. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter. Look for a watch list later tonight, as well as some stocks that we're thinking of trading prior to the opening bell on Monday. Get outside, enjoy what's left of your weekend. Have a great day. We'll talk to you soon. Take care.